Hello and welcome. Today we're working on how to calculate net income if we know things like assets and liabilities and equity, and we have investments in the business and dividends that are coming out of the business. What would net income be for the year? Okay, so this is a problem that happens at the beginning of financial accounting. This happens to be in Chapter 2 of financial accounting, where you're learning how to do journal entries and you're learning about the financial statements, including the balance sheet where you have assets, liabilities, and equity, and you have the income statement where you have net income. So here is the problem we have. We have a company that has the following assets and liabilities at the beginning of the year and the end of the year. Here's our assets, liabilities, and equity. Now, we know assets and liabilities. We don't know equity, but remember, we know the accounting equation. The accounting equation says assets right here have to equal the total of liabilities and equity. So what would equity be? Well, at the beginning of the year, it'd be 60 minus the 20, that'd be 40,000. At the end of the year, I can just copy this down because this is the formula. It's the same formula, right? I'm taking the 105 minus the 36, and that equals 69,000. So what happens is equity has grown in this year from 40 to 69. It's increased by 29,000. So how do we solve these problems? We're going to do a template, and I'll show you in just a second. So let's just look at the problem here. These are 4 different examples. What if the owner made no investments and no dividends? What if they made no investments but paid dividends? No dividends but had investments, and then both dividends and investments. So here's how we do it. So we're going to take in category 1 or situation 1. We're going to say beginning equity plus investment plus net income minus dividends gives us ending equity. All right, so we already know beginning equity is going to be, we just calculated to be 40,000. I'm going to make that absolute so I can copy it all the way across. I can hit it with F4, and that becomes 40,000. We know it's 40,000 in each of the 4 separate scenarios. We're using the same beginning information, just with different scenarios A, B, C, and D. The ending equity is going to be the same thing every time, but it's going to be 69,000. So I'm going to make this F4, put $sign, that anchors it, or that's called an absolute address in Excel. So I can copy that across. That's 69,000. So we know we start with 40. We know we end up with 69,000. Now, what if we have an item A? It says we made no investments, so that's 0, and no dividends. Well, that's 0 also. So what would our net income be? Well, if we're trying to reverse and figure out what's going on with the problem, instead of saying 40 plus 0 plus net income minus 0 equals 69,000, we do the reverse. We're going to take the 69,000, and then we're going to reverse, do the opposite, and add the dividends. We're going to subtract out the investment and subtract out the beginning equity. So the answer is a $29,000 net income. Now, if we do this correctly in Excel, here's why Excel is so powerful. Because this is not really 4 different problems. It's the same problem, just changing the numbers 4 times. So if you have 0 investment and 0 dividends, the answer is going to be 29,000. So what do we do for item B? The owner made no investments, so that's 0, but they paid dividends of 15,000, so that's going to be a minus, right? So 15,000, okay? So that means we take 40 plus 0 plus 44 minus 15 gives us 69,000. This problem is already built because I did the formula the right way. Then I've just solved my problem by using a template, and all I have to do is put in new numbers. So that's the formula, and we have that. So the answer is 29,000 for situation A. The answer is 44,000 net income for situation B. What would it be for situation C? No dividends were paid, so we put 0 dividends. We did invest 55,000. So what happens here is If we started with 40 plus 55, we must have a net loss of 26 because we didn't pay any dividends to make the ending equity to be 69,000. See, once we start with 40 and we put in 55 more, we're at 95. Well, how did it get to 69,000? Well, we must have a loss of 26,000. So we can figure out net income if we know beginning equity, ending equity, how much we put in the business, how much we took out of the business, that's dividends. And so we can figure out the difference has to be net income. All right, the last one here. If dividends paid were 15,000 and the owner put in 35,000, then net income must be 9,000. So here's how to solve this answer if we have our setup, we have beginning and ending assets and liabilities, and we have different investments and dividends. But you see this one problem. We did this formula one time and copied it across. This formula works for column D. It says we're taking the 69 plus the 15 minus the 35 minus the 40, and we end up with our net income of 9,000. So the math is the same every time. If you do this by hand, you have to do this 4 different times. If you do this with Excel, you do it once, you made a template, and now it solves every problem that you have with beginning and ending equity, investment, and dividends. We could go back and change, now watch, we could go back and change our beginning assets to be 92,000. This changes equity to 72,000, and it changes our net income numbers. It recalculates based on our template. Excel can build a model, build a template, and you don't have to do this all over again. This would be a real pain doing it by hand, but your Excel building a template is going to be super helpful. I'm going to undo. The way you undo is Command or Control Z. Puts it back to 60,000. This puts this back to 40,000. And here are our answers for the 4 different scenarios. Hey, thanks for watching. If you're trying to learn accounting, I've got playlists for all the chapters in Principles of Accounting. So we'll see you on the next video. Thanks for watching.